Good morning, everybody. 8:10 a.m. August 16th. August 16th. Another crazy day in the markets. We had to keep continually having like low relative volume. Yesterday was just a slow melt up, a very slow melt up, and the market was pretty strong yesterday. Continued to push higher, and now we're at some key levels. Okay, this market is definitely very frothy, very frothy, but doesn't mean that it can't move higher. It's just, I think we're due for a little bit of a pullback, but like I said, I don't know. I really don't know what's going to happen today. We got Michigan consumer sentiment at 10 a.m. That's the news that's really going to come out today. All right. And right now, like as I'm looking at the market's pulling back right now. All right. This is kind of should happen. I mean, it's at a key level. And we'll get into all that. All right, let's just start it off here. Welcome to my channel. My name's Steven Gonzalez. I use market profile and volume profile to find structure in the markets along with supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. This all helps me find my edge in structure. So this structures data for me. It makes me see things very quickly, and it's my edge. All right, and then once the market opens up, it's a whole different kind of thing. I talk I'm going to do a little bonus today with market internals. All right, I'm going to go a little more into detail of what I'm looking at when the market opens up, and hopefully every day I do this at 8:10 a.m. You can join me, have a cup of coffee, do whatever tea, whatever you drink, and you join me. Right? And what do we go over? Yesterday's market movements. We go over what's going on in the news this morning, leaders and laggards. We go over upgrades, downgrades, maybe price target raises, price target lowers. We go over daily charts, economic calendar, and then the main event, I like to call it at 8:30. I do the NQ and the ES futures analysis. Okay, and that's where I come up with my long and short trade scenarios that are my blueprint for the day. All right, and then when the market opens, it's a whole nother ball of wax. All right, it's a whole different story. And then that's new information, right? That you don't know. You got to analyze the new information, okay? So, got that spiel out of the way. So now, if you're new, subscribe, set an alert, all right? So that way you can join me every day, all right? And if you like my content, please give me that like, smash that like button. That would help me out tremendously. You could also follow me on X at Gonzo719. And you can also follow me on TikTok. That's Gonzo719Trader. Okay. Now, let's go over to our watch list, futures watch list. There we are. And we'll look at what's going on this morning, what's moving. We got Bitcoin leading the pack, up 2.32%, followed by Ether, up 2.21%. The VIX is pushing up a little bit, up 1.18%. Gold, loving it. Long-term holder of gold, it's up 0.73. Flirting up with those all-time highs. 30-year bonds are being bought. That should send yields lower. Russell's flat. 10-year yield is kind of pushing up a little bit. Okay, but that should smack it back down a little bit. Okay. And next week we have Jackson Hole, and that should move something too. Dollars down 2.21, ES down 0.22, Nasdaq's down 0.24. Okay. Silver's down 0.5, and crude, crude is down 2.55%. I don't know why that is right now. Might find that out in a second. Okay. Now, hold on a second here. All right. Let's go to the Mag 7 Plus and Coinbase up 0.7, 0.70. Well, that just changed. Netflix is the leader, up 0.52, followed by Coinbase that just moved on me. And then we got a bunch of red here. Okay, so let's go to the half percenters. AMD down 0.56, Tesla's down 0.72, Meta's down 0.77, Nvidia down 0.89, and Broadcom down 0.9. Okay. Now what I would think psychologically here, we just came to key levels in the SPY and the QQQ. I think it's probably a perfect time for people to take some profits. Okay, might be just a profit taking day, not a prediction, just based on, if I was long all the way from there, I'd be like, all right, let me take my profits. You know what I mean? All right, moving on to the top sector stocks. All right, here we go. Disney's up 0.1, 0. UPS, that's not a lot of leaders here. Let's go to the half percenters. CVX, Chevron down 0.59, Qualcomm down 0.64, Walmart down 0.71, Exxon down 0.74, and Eli Lilly down 0.77. Okay, let's look at the swing trades. That's not swing trades. Let's go back here and see who's leading the pack here. H&R Block. H&R Block, I believe they reported earnings. I could be wrong about that, but they're up 8.54. BABA got an upgrade. Okay, BABA got an upgrade. They are up 2.36%. Bitcoin ETF up 2.2%. MicroStrategies up 1.24. Mara up 0.97. Not a lot of big leaders here today. Okay, let's look at the laggards. Laggards, we got Applied Materials. All right, we'll talk about that. They're down 2.85%. Airbnb down 1.46. Devon Energy down 1.21. Lam Research down 1.13. Palantir down 2.93. Okay, this looks like profit taking to me. Okay, it's what I'm seeing. All right, let's move on to the guts, to the sectors, which I'll be talking about later. The market internals. Okay, is there a leader? There's not even a leader here that's green. That's interesting. So no leader here. We just got laggards. So we got, let's go down to the bottom. All right, tech, that's the biggest heavyweighted sector in the S&P 500, is down 0.27. Semis is encompassed in tech, that's down 0.76. And energy, with crude falling, is down 0.76. That does not move markets, energy. So, but it's down. All right, we got to talk about it. All right, I think we're ready for some economic counter, some news, some upgrades, downgrades. Let's get into it. Let's get first off to the economic calendar. Let's talk about it. All right, what do we got today? Nothing at 8:30 that moves markets. Housing starts, building permits. Not worried about that. But 10 a.m. you got a slew of Michigan consumer numbers. This should move markets. Okay, this should move markets. Inflation expectations, consumer sentiment, that should move markets. Fed Goolsby speaking at 1:25 p.m. I'm probably going to be done with the markets by then, unless I'm in some freaking big long trade or short trade. We'll see. We'll see. Okay. Now, we are going to go to some news. All right. Let's look at some news together. All right. Maybe I got to make this bigger for you. Okay. Let's look at this together. Ford stock rose 0.1 despite the National Highway Traffic Safety Administration stating that the auto giant is recalling 85,000 Explorer SUVs. There's the AMAT. Stock fell 2.1%, handing back some of the chip-making equipment firm's strong gains ahead of its results despite forecasting fourth quarter revenue slightly above estimates. Texas Instruments stock rose 1.3 after the semiconductor company signed a non-binding preliminary memorandum of terms with the U.S. Department of Commerce, potentially receiving up to $1.6 billion in direct funding. Kroger stock rose 1.1 after the supermarket chain announced plans to lower grocery prices by $1 billion after the completion of its proposed $25 billion merger with smaller rival Albertsons. All right, then Nvidia stock rose 0.5 after Jefferies said the chipmaker is likely to continue delivering earnings beats in the coming quarters, albeit smaller ones. H&R Block stock soared 8.4 after the tax preparation services company announced 17% dividend increase and a 1.5. There you go, the 1.5 billion share buyback. That's the important one right there. All right. Autodesk stock fell 1.7 after Bloomberg reported that executives design technology provider continued utilizing a controversial sales strategy despite saying it would stop and ignored risks related to the practice. There's some news there. Now, as far as the juice, okay, Fed Goolsby in red here said some leading indicators of recession are flashing warning. He said this at 6:44 a.m. I believe that's why markets are dipping a little bit. All right, that's helping people take profits. All right, Fed Goolsby. All right, Fed Goolsby. All right, let's go to upgrades and downgrades. Let's see if we got updated stuff here. We do. All right, let's look at it together. Upgrades. Let's see. Cisco upgraded. Fox upgraded. Illumina upgraded. Nike upgraded. And Bill, that Ackman guy bought Nike. Um, all right, let's go to downgrades. Downgrades. We got Bumble downgraded. We got Estee Lauder downgraded. We got Lumen Technologies downgraded. That's about it. Let's see price targets. Price targets. All right, we'll go to target raises first. Walmart target raise. Love it. Love it. Love it. I'm owner of Walmart, and it's been exploding up to 82. Another price target right from Walmart. Another price target. I love it. Love it. Love it. Palo Alto price target raise. Very nice. Very nice. Who else here? What we got here? John Deere target raised. Salesforce target raised. Chewy target raised. Well, I got a lot of target raises today. What else here? BJ's target raise. Alibaba got 3 different target raises. All right. And Applied Materials got a target raise because they didn't have bad numbers, but they're down. Okay. Maybe a buying opportunity. Don't know. Don't take my advice on that. Now, target lowered here. We got Snowflake target. That's just been getting beaten. Jesus. Charles Schwab target lowered. JD.com target lowered. Advanced Auto Parts target lowered. All right. Now we'll end it off with the initiations. Not really anything there. I think we're done here. Let's go with more news. We already talked about Applied Materials, Texas Instruments. We already talked about that. Let's see. Pfizer Biotech say combined flu COVID vaccine misses a main goal of phase 3 trial. I don't know how much in here we could talk about because that we didn't talk about. Yeah. I think we're going to wrap that up there. Yeah, I think that's all I wanted to talk about. Right? I think we're ready for daily charts. What do you think? Daily charts? Let's do it. Let's do it. Boom. Let's do it. Daily charts. That is not daily charts, is it? That is daily charts. All right, let's hit that again. Getting rusty here. All right. Let's talk about these levels. All right, so this is friggin' nuts. Look at that. Unbelievable. But look where we're at, though. Okay. Now, that was last week's range. That orange to that orange. Obliterated that. Okay. This is the previous week's. Then that, we're almost up to that. Now, if you look to the left, this is the consolidation right here where we dropped. We're right at this point. Okay, let's call it 554, 555. Okay, this is a key level of resistance. I would expect the market to get stopped here. What do we do here? Don't know. You just got to have it in your head. Could we move higher? And I would think we go no higher than 555. All right. But this is obviously this trend line got broken. Gapped right above it. That's gone. Okay. Big gap. Big gap over that 50-day moving average. Oof. Unbelievable. Let's look at the live look. In futures, how we looking? See, we're pulling back a little bit, right? Look at this resistance in futures right there. 5587. All right. That is a monthly high. Okay, that's probably June's monthly highs. Okay. Those whites are monthlies. Okay. So that's what we're looking at there. That makes sense that we're stopping there. And then you got Goolsby saying flashing warning signs of recession. Okay. Now, let's go to Qs. Here's our Qs, right? Let's adjust this trend line here. All right. So you can see here in the Qs, look at this resistance, right? 474, 475. That should act as resistance. That's the consolidation where you ripped down. And now we're at the top of that consolidation. Okay. This makes sense why we stopped there. Okay. Now, let me adjust this trend line here. All right. Oh, look at that. Look at that adjustment, dude. That's well, unbelievable. That's very powerful. Right to that trend. Unbelievable. Okay. Didn't realize that when I would do that, but it doesn't matter. You see the resistance here, right? Okay. You see the resistance here. So, I, I mean, can we go higher? Sure. Sure. This market's nuts, right? Probability today? I don't think so. Let's look at live look at futures. See, look at this now. Makes sense even more, right? You got resistance right here. Let's say 190, 196, 197, let's say, right? And then you're hitting the 50-day moving average. You're wicking right there. See that in the futures? You're wicking right off that 50-day moving average. So it makes all the sense. Now, if you look at this pattern, this is an inverse head and shoulders pattern. Can we go all the way back down to say here? Don't know. Okay? Don't know. But there's profit taking has to happen eventually, right? And then scaring the market down, and maybe we move down back to here. I don't know. Okay? But that is our daily charts. Okay, we're going to go to the triple-headed monster here. Triple-headed. We're going to start off with that 10-year yield. Now, 10-year yield today is down 1.25%. See, we closed here. That's why we're down here. Kind of like setting up this little range right here. All right, so yields are still low, right? Got real low, pushed back up. Now we're kind of just like in this no man's land here. Okay, let's look at that dollar. Let's look at the second head. Boom, dollar's in a range. Okay, dollar's in a range right here. Just moving around, right? Dollar's in a range, right? Let's look at it real quick, because what do I talk about all the time, right? The yen carry trade, and then we talk about the euro, which is the largest currency against the dollar, 57.6%. The yen's about 13%. Okay, so let's look at the euro. The euro has pushed up, right? Now the yen carry trade, right? Because you saw that meteoric rise right here. Boom. But now look, it's pulled back, helping this market take away that unwinding fear. But it's pushing up today. It's pushing up and we're dipping down. So I'm not saying it's lockstep correlated or inversely correlated, but we'll have to see. Now let's look at that VIX. The VIX has gotten crushed. I mean, come on, 65, boom, all the way down to 15.48. Now 15.48 is almost still a 1% expected move today. It's just that the volume's been relatively low. Okay, the volume's been relatively low. So that's going to wrap up the triple-headed monster. Okay. All right. Now, just give me a sec. Okay, let's let's go to the main event. The main event. All right, so I'm going to bring you right to that. Give me a sec. Give me a second. And we look at these market profile and the volume profile right here. Okay, so see this market's dipping. Okay, this is expected. Now we're going to talk about a couple things and nuances, all right, for market profile, because I'm seeing some nuances here. Okay, now we're going to talk about we're going to talk about a bunch of stuff today. Okay, I'm going to open this up. This profile real ugly looking. Okay, real ugly looking, but we got some key levels to talk about. So let's talk about structure. Let me get my marker out. All right, let's just talk about what's going on here. Price is at 54, 55.47 right here. Boop. We're at the overnight lows, and we're making new overnight lows. Okay. Yesterday, low volume push up. Low volume push up. Okay. Now, this is what we got. We're inside yesterday's session. Here's the midpoint of yesterday. We're below the midpoint. Okay, we're below yesterday's midpoint, which is 50% Fibonacci of yesterday's move. Just look at it that way. But a midpoint is pretty self-explanatory. It's the mid. It's 50% of the session. Okay. So, what else do we have here? Okay, it's very important. And we're pushing down. This is expected based on this structure. Okay, still in supply. Okay, still in supply. I just showed you the key levels in the SPY and the QQQ. So this is making all the sense. Okay, now check this out. The most traded price of the week, okay, moved up yesterday to here. Okay, that price is 55.68. Okay, 55.68 happened to be the most traded price of yesterday. That's how much volume transpired up there. Okay, so you got to think about that. Let's think about that for a second. This is how this works. That's why I use volume profile and market profile. Okay, check this out. Okay, so if you have the most traded price of the week, the most contracts traded of the week, of yesterday, and of the overnight right here, what do you think they were? Longs. So if the most contracts have traded in the last week, in the day, and an overnight, this is why this is happening. Okay, there's always a reason why things are happening. Okay, does that make sense? Not sure who's watching. I just want to make sure, does that make sense? It's one advantage of volume profile. Okay, you don't see this in candlesticks. You do not see this. Okay, this is not there for your eye in candlesticks. All right, so what else do we have? What else do we have here? Okay, we have a weak low right here in yesterday's session. What does that mean initially? Shorts had poor trade location right here. But what does this also mean? There's longs right there. And in this world of market profile, this means that if it comes back here, this needs to be corrected, which means to break it. Okay. And what do we have below us? Right? What do we have below us? Well, yesterday we had a nice move up. Here's that volume in the overnight, right? But what is below that? Single prints. Single prints. Now, what are single prints? Single prints are one-way traffic. Single prints are emotional buying or selling. Meaning, in a market profile, each bar is 30 minutes. When a bar has no other bar of time that overlaps it, it's considered a single print because there's only one-way traffic. Okay, there's not going to be support and resistance there. Okay, so this gives me the favorite opportunity to show my new little animation here. Okay, so picture this. Okay, I'm going to make sure you understand this. Picture this trading right here. That's an elephant. This is a toothpick. That's what's holding up these prices, is this little toothpick. Okay, so what do I call that? What do I like to call that? I call that elephant on a toothpick, which is poor foundation. And look at that. Boom. Elephant on a toothpick. Obviously, it's illogical for a toothpick to hold up an elephant. Okay? But this is the structure that we're working with right now. This is the structure we're working with. Ha! When does he fall? Well, he falls, okay? He falls when the market internals are weak. And then what happens is you cut through that like a hot knife through butter. Now, what do I say? Okay, here's the flip side of that. If the market comes down here, finds support, that is bullish, because that's not supposed to happen. So the cuts two ways, okay? But I just want to make sure we're on the same page. Now look, these are single prints here as well. See that? Okay. So let's go back. Okay, let's go back to what we're looking at right now. All right, we'll just talk about the structure, right? So what do we have here? Let's look at it together. You can see the pocket right here has no volume in it. That's that toothpick, okay? So two things I want to show you guys. There's my composite volume on the right, right? That shows me also, ooh, not a lot of volume there, right? Well, I have another layer of market profile that shows me single prints, okay? That's why I love market profile for the single prints, right? Volume profile also shows it, but why wouldn't I want something that just shows me white boxes here that I know that's single prints, right? It just makes it easier on my eyes. I don't have to look at the profile. Like, can I do that? Of course, right? All right, so it's very important. Now we have also a gap, right, with the single prints, okay? Just so much structure to talk about right now, all right? So this is all making sense here, and you have a poor high here. So guess what that meant? Longs had poor trade location. Now let's show you that in market profile, right? So all it is 30-minute bars, right? That's what I want to show you. This is called a poor high. See, 30-minute periods, tried to go long, tried to go long, tried to go long, and those are weak hands. Overnights are weak hands. Poor long. You tried a long here and you got messed up, which left a poor high. Now, this can come back and get corrected, but that's why that happened, okay? That's all market profile is 30-minute bars. That's all it is. And it looks like this when you put them together, okay? All right, so let's talk about everything that's going on in this chart and why I have market profile, volume profile. Okay, so we got our most traded price of the week right here. We are below that and below yesterday's most traded price. So currently that is bearish right now, right? Right now. Now, the most traded price of the month is here. That price is 54.70. Price is above that. So I put more weight on the most traded price of the month because in a macro picture, this is bullish. The market stays above that. Overall, it's bullish. But for a scalp, for a day trade, immediately, this is bearish. Does that make sense? I'm trying to make sure everybody's with me. Does that make sense? I put more weight on the most traded price of the month than I do the week. But that just shows me more macro. Okay? This shows me the story. The story is we're bullish. Okay? But a day trader, this is a little bearish right now. Okay? All right. So that's why that's on my chart. All right? So we have an overall macro bull versus right now a very intraday little bit of a bearish move here. Okay? So this is what it's all about today. All right. It's all about yesterday's lows. And we're still moving. I don't know if you heard that. That's large orders hitting the tape. Okay. That's that alarm that I have set. So right here, that's that week low. Okay. Now, one or two things that happens with that week low. We come in, push through. Now you're into single prints, and we just dump right to where? To the most traded price of the month, 54.70. Okay, that's what it's about. Now the other big level here is this most traded price of yesterday, right there. That's it. That's the playground. Okay, that's the playground. So let's talk about it. Let's talk about it and let's get scenarios going. Okay, still got to do the market internals bonus. All right, that's coming. Now, let's do the ES trade scenarios. All right, we're going to start with a bull scenario. Okay, so this is very important. Remember what I said. Elephant being held up by a toothpick. Okay, elephant being held up by a toothpick. This is our area. The bulls have to step up. Okay, very important. Okay, so now this is bullish. Remember, bullish scenario. What I can see, okay, is you got your week low here in yesterday's lows. Okay, you got pretty nice little volume here in the pre-market, in the overnight session yesterday. So we can come down here, and this could be a bear trap. Okay, because you can break that like this, and you actually got single prints from the past here. If this is the big tip in the single prints, should not be supportive like the toothpick. If they are, and you hold up that elephant, this is bullish. Higher low, higher low. And guess what we have here, folks? Single prints in the overnight. Guess what you're going to do to those? Cut through them like a hot knife through butter, and you're probably going to test here. Does that make sense? Okay. So that is a very bullish if you get support, no single prints in the gap. Okay. Do I think we break out and go up? I would say probability is not on the side, but if you did this and kind of balanced and balanced, maybe you get to the end of this supply zone of 5,600. Like I said, we've had a lot of moves. I don't know. Okay. I think it's time for the market to either correct or just like stay here and try to build value here. Okay. So let's go to the bear. Now, a couple things here. We know bears, you got to defend this area here, the new most traded price of the week. Okay, it's around 55.65, I think I said before. Okay, so what do I want to see? I want to see us push down maybe a little bit, maybe you can even clean these single prints. And whoever doesn't know that this is the most traded price of the week, right? Come back up here, and I want to see if we can find acceptance above this level. What does acceptance mean? Acceptance means you go like this. But this is a bear scenario, right? So I'm gonna look for this. Either it holds like this or does like a little bull trap, does this, goes under it, hold. These guys now are in trouble. You're gonna come down, you're gonna test the week low. Yesterday's lows. You got a gap in single prints. Okay? Gap in single prints. And then what happens, G-Man? This. That's what happens. Okay? If you get a weak market, because now you just trap some longs even more. Everyone's long. Everyone's been getting paid. Okay? Let's destroy these dip buyers here. And you start to just go like this. You see the market start to dump. And there's the hot knife through butter. You clean those single prints out. Okay, you got demand zone here, and I think we do test the most traded price of the month. That is 54.70. That is 54.70. Now, if you test this and you go like this and you start holding, boy, oh boy, this gets uglier. Okay, you got a demand zone here, 5420, and wow. I mean, you got single prints. You can go down to 5400. This would be nuts. You can go all the way down to like 5364. I'm not saying that happens, but I'm just saying there's so much froth. Okay, this is more realistic, I think. Okay, but you have to put this in the cards. You have to put it in the cards. Okay, I'm getting a little longer winded today. I'm hoping you guys getting some golden nuggets out of this and understand why I choose the volume profile, market profile. Okay, now we're gonna get to Nasdaq. We're gonna get to Nasdaq. All right, let's look at the Nasdaq together. Okay, we're gonna look at structure first. Zoom it out a little bit. Okay, now let's look at what we have going on here. All right, here's price. Price is at the midpoint of yesterday. Okay, we're at the 50% of yesterday's session. Okay, that's number one. Now let's look at the profile. Here's our profile, and what do we got? Thinny, thin, 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 right? What do we go? Look to the left. What do we have here? Single prints and a gap, right? Like I said, makes it easier on my eyes here, but thinny, thin, thin right here, right? We all know what that means. Elephant holding up by a toothpick, okay? So I'm not going to go into hashing all that because I just did before, okay? So we have very similar setup here. Very, very, very similar setup. All right, now, what do we have here? So this very exact structure, okay? Because look here. The most traded price of the month is 190.80. Okay, remember I said yesterday we're back in ultimate balance in the NASDAQ and expect we can get another big move? Well, we got it, right? We got the big move. We got this move and we got this move. Now, I don't know if you guys saw any of my videos where I talk about a look above and fail, right? So I don't know if that's the case here, but let's just say we're going to look at this again together. We still have the most traded price of the week in the month here. Big level, big level, okay? All right, now we have the most traded price of yesterday right here. Most traded price of the overnight right here. So the same thing I just said. What do you think they were? Long. And now they're covering. Okay? They're liquidating the longs. Weak hands. Okay? Weak hands. Okay? We're still in supply. And guess what? This is a gap. It touched the little gap overnight and said hello. And now we did this. Okay? There's always a reason for everything. You know, nothing I have on my charts is something I don't use or something that's insignificant. Everything there is significant. Okay? So, let's talk about our struggle. We just talked about major levels. Okay, let's just talk about what we're seeing here. So, overnight high, overnight low. Price is here. Here's yesterday's session. We're in the middle of yesterday's session. Okay, now what do we have here? We do have single prints. Okay, so actually, I should put them on there. Okay, and we could, let's see if we can really expand in here so I can really show you guys. I just want to make sure you guys see everything here. Okay, get a little closer look here. So what I'm going to do here is I'm going to put single prints, show you exactly what I do, just so I can see them right in the session of yesterday. Right there, those are single prints. Line up and meet up with older single prints and the gap. Okay, so you just got a bunch of toothpicks there, right? And what do we have here? You see these single prints right here, right now. Single prints in the overnight. All right, in the overnight. Okay, so let's go back to structure. Okay, so pushing at the midpoint here. All right, now we don't have that weak low. That's okay though, because we have single prints here. So you can see the thin volume here. That's poor structure. All right, That is very poor structure. And what do we got to do? Throw up the elephant. That's what that means. Okay, that's poor, poor, poor structure. It's emotional, right? It's emotional buying. All right, so we can definitely see we're just pushing down. This is not a lot of volume here. Okay, so again, key is the lows from yesterday. All right, you have single prints before it, you have single prints beneath it, you have a gap. Okay, so same scenarios. Okay, very simple. So this is going to be very simple for me to talk about it here. I don't have to go into big detail like I just did before. Okay, so let's just go right into scenarios. So this will just be a rehash if you didn't understand it in the ES, and you can understand it here. So we'll start out with the bull. They have the momentum. Remember, like I said, this is the big level. You have to worry about the market macro wise being above. Well, we are, right? But you have to separate the macro from what's going on here. Okay, this is bullish still. Don't get me wrong. All right. Now, what do the bulls got to defend? Okay, here you have single prints starting here, down to the lows, down to the lows. Okay, you have the start of a gap right there. Okay, so this area has got to be defended by bulls. Okay, so this liquidation here, we want to see if we're bullish, come down here and either it tests the lows or it comes in here, and if it gets bought, lower high, and the market is not internally weak, you could easily rip through these single prints, go right back to yesterday's most traded price. Okay, and then it's a dip buy, and it's the momentum continues. Okay, remember, single prints, you look at it two ways. Weak gets cut through like hot knife through butter. If the market buys it, it's bullish. Okay, it's bullish. So that's the only thing I'm looking at for a long. Okay, now short. This is where you get your mouth drooling a little bit, right? So two things can happen with the shorts. Okay, same thing. You're just looking at this area, single prints gap, yesterday's lows. Okay, and we're looking at this level, the most traded price of yesterday. All right, so two things can happen. All right, we can get two things can happen. We can open up, not even test here. Let's say we can open up, clean these singles. Now you got to get a test here. What do? You get these dip buyers in, you trap them, and if you can't find acceptance above it, and you do lower high, guess what you're going to do? You're going to take out all the longs that went long, and now we're going to find out the real when the rubber meets the road here. Okay, if the market's weak in these single prints, very important, will get destroyed. Okay, and it's going to be swift if this market's weak. It's going to go like this. You're going to go into the gap, and you're just going to go rip right down. Okay, and then you have a demand zone here. You can get a little pop, but if people get super nervous, it's going to go straight down to the most traded price of the week and the month. That price is 190.80. 190.80. If you drop below this, my lord, look out below. Look out below. Okay? That is our scenarios. Now, like I said, give you one little thing here. This can also do this. Okay? Doesn't have to go up here. It can just start and rip. And it might just rip and just do that. Okay? Just want to make sure you guys understand that. I would like to see that. And I don't mind seeing this because I still want to see, okay, single prints, what are you going to do? All right? All right. So that is wrapping it up. That is wrapping it up. Now I'm going to get into the bonus here in market internals. Okay? Bonus market internals. Now, if you see my reels that when I do day trades, I put this up here sometimes in my reels. Okay. Now, I use this every day. Okay. This is my number one place to look to find the strength of the market. Okay. How does it work? Why do I have it up here? Why am I looking at it? Okay. I'm going to tell you right now. Here's a summary, and then we'll get into the detail. Okay. The market, so specifically the SPY, is a market cap weighted index. Okay. It doesn't just move because it moves because of the heavy weighted stocks and the heavy market cap weighted sectors. That's how the market works. Okay. If this is strong, right, like yesterday was pretty strong. Okay. This right here was pretty strong. I'm going to get into that. Okay. Now, when the market is showing the market cap weighted stocks are pushing the market, you are going to get a good move. Your pullbacks are probably going to get bought, right? It throws a lot of the technical analysis out a little bit. Okay. Still use it, I'm saying. But like at the end of the day, whoa. Okay, so I'll give you an example. I'm going to zoom out here. And this is the monster day where I caught the breakout. Look how much. I mean, like I said, I'm going to get into this. But I'm just going to say, look at the days. That day was a monster day. See, yesterday was a little low volume, but still strong, right? This day was a little mixed, a little less weak and strong, okay? Now, all right, let's get back to this, okay? So this graph here, I'm going to give a shout out to Shadow Trader, Peter Rezenchek. They built this indicator. This is not mine. I had to pay for it, okay? This indicator here is a representation of the market cap weight, okay? This is the representation. Now let's get into it. Up here, every sector, you notice every sector, they're in the order of market cap weight. That's how I have them lined up here. They're in the order of market cap weight. So here you see Infotech's 31.4% weight in the S&P. That is going to move the market. Financials is 13.1. Healthcare is 11.9. Consumer discretionary is 10%. So if you just do, let's just round it, 32, like 13, what's that, 45%, and then you got here, let's say 45% in 12, what is that, 45% in 12, why am I, 57, 67. We're not even into communications yet. You already have 67% of the market right in the top four sectors, and then you have communications, okay? That's why the market moves up. It doesn't matter if staples are hot and industrials are hot and these top four are red, the market's not going to go up. Okay? This is what drives the market. Now, get in depth. XLK. This is XLK. What do you have there? Your Apple, your Microsoft, your Nvidia, your Broadcom, financials, your JP Morgan, right? Your Goldman Sachs, your Bank of America, your Wells Fargo. Okay, your Berkshire Hathaway. Berkshire Hathaway is number one. Okay, healthcare. You got United Healthcare. You got Johnson & Johnson, Merck, Pfizer. Consumer discretionary. That's your Amazon, your Tesla, and your Home Depot. Communications. That's your Meta and your Google. Industrials is basically GE. And believe it or not, Uber. Okay? So, now that you know that these are all weighted, they're all weighted, this graph represents the weight of these sectors. So the green and red bars, okay, represent the weights. So when these are moving up and they're like this, more than not, you're going to see, like, see Infotech was the biggest sector yesterday, was up 1.6%. And these, and let me say that again, okay? These percentages that are up are from the open. They're not from yesterday's close. They're from the open. So this graph is from the open. I don't care about yesterday's close. I want to know when the market opens, what's driving the market. Okay? So in this scenario right here, I know the market is strong. Okay, the level can be down here. Okay, and then I know, all right, well, it's kind of indecisive right now. Even if the market's moving up, I don't trust it. Okay, so this represents these weights. Okay, it's how the market works. This market will not go down when you see this above zero like this. The market's not going to go down. You're not going to fight this. You're not going to just short. Now, if you're a scalper, ignore what I'm saying. Okay, so this is market cap weight. This is how the market moves. I can't stress it enough. It's how the market works. Look at an RSP, which is an equal weighted index versus a SPY. It don't look the same. Okay? Now that I mentioned RSP, this white line here, okay, is equal weight. Just think of that like RSP. So the white line's RSP, equal weight. So whenever I see this white line, it's telling me the overall market is bullish. Okay? And when you have them, like yesterday, the overall market wasn't as strong as the market cap weights. Okay? I'm going to explain that again. Look at when the market opened up yesterday. See how it was negative? It was a little negative. And look at this white line. That meant that overall the market was weak, meaning equal weight. And then it recovered. And then for the rest of the day, it was just being driven by the market cap weight stocks. Okay? And then the overall market kind of caught up with it. So the way I use this indicator is sometimes this white line will be below a little bit and these market cap weights will be above it. Oh, you don't fight that. Okay? You don't fight that. All right? That is the weighted AD indicator, and it's the market cap weight and equal weight in the line, okay? Based on these sectors from the open. Okay? These sectors from the open. All right? Now, that is what I look at. This is my baby. This is the thing I base everything on, okay? Now, we'll get into a couple more other things here. All right? This right here is your vol-D ratios, okay? It's the vol-D for the NYSE, and it's the NYSE exchange, not the S&P 500, the NYSE exchange, okay? And this is the vol-D for the NASDAQ exchange, okay? That's like over 2,000 stocks in each exchange. All right, so this measures volume when it's green, that's volume ratio going into up stocks versus down stocks. So yesterday the NYSE had 5.95 to 1 volume going into up stocks versus down stocks. It's very bullish. Okay. NASDAQ had 3.88 to 1 volume going into up stocks versus down stocks. Okay. That's how that works. Now, I know I'm in another community, all right, and a lot of times I give a tip. When this ratio is 1 to 1, doesn't matter if it's red or green. If it's 1 to 1, you very rarely get a breakout that day. You stay range bound. Okay, you stay range bound when the ratios are 1 to 1. Okay, so that's sometimes what I base myself to. I'll be like, okay, these ratios are 1 to 1s. Am I really expecting a breakout? Probably not. Okay, now moving on. These are advanced declines of the NYSE exchange and the NASDAQ exchange. Okay, so that's just advancers minus decliners from yesterday's close. So yesterday, pretty bullish, 1,456 stocks advancing. NASDAQ 1,817.8. Now, when this is over 2,000, that's very bullish. Okay, very bullish. Now, when you drill down into the S&P, the SPY is what most of us trade, ES. This is based on 500 stocks. Okay, so this is the advanced decline of the S&P 500. That's of 500 stocks. And this is the NQ 100, which is what we trade. The QQQ and the NASDAQ is only based on 100 stocks. Okay, so the S&P 500 yesterday had 331 advancers out of the 500 stocks. All right. Added, it's advancers minus decliners. Okay. And the NASDAQ 100 had 84 advancers. So just very bullish. Okay. And this is why I look at internals when the market opens. That's why when I say, hey, I got to see what the market looks like, because if I see tech, okay, and I can tell you this real quick. If tech is down like 1% red, I've seen it where tech is down 1% red and everything is green, the market usually just goes down. Or everything is red and tech is green, the market usually goes up because of the weight of this sector. Okay, I hope, and I have the VIX right here, just so, but I hope that made sense. I hope it made sense. I don't know if you guys are still around. I'm giving you that bonus because this is my bread and butter. I look at this. This is what makes me go, okay, this is my plan. Now I got to go with my pre-market plan. Okay, this really submits and it gives me a lot of confidence. Okay, it gives me a lot of confidence and it tells you the guts of the market. Because I hear other people talk about stuff and it's like they're really not looking at really what drives the market. Okay, and that's why price action can fool you a lot of times. I can see a sell-off happen. All right, the day, I'll give you an example. I think it was, I don't remember what day it was. The breakout happened, the big one, right? Well, this was like at zero, and the market sold off quick. And I was like, no, I'm going long. I'm going long because that was a trap. Okay, and that's, like I said, it's nuanced. It's not like you're going to see this and you're going to trade off it like I am right now. I have a system. Okay, just wanted to let you know that it's what I use. Okay, hopefully that clear things up. If anybody has any questions, send me a question. I'll answer it. Okay. But that will do it for me. I got gamma levels I got to do. I went a little extra here. All right. So, hope everybody, we got our scenarios. I'm excited for the scenarios today. All right. They're very clear. Very clear. I like when they're clear. Okay. I really do like when they're clear. All right. Now, if you haven't and you just saw my bonus, you can do me a favor. Subscribe to my channel. All right. Set an alert. All right. Set an alert. All right. If you enjoyed it, if you learned something, please give me a thumbs up or a like. All right. Please give me a thumbs up or a like. So, and you can always follow me on X at Gonzo719. All right. And you can give me a follow on TikTok, Gonzo719 Trader. All right. And say hello to my friend here. This is going to be our friend today, guys. The elephant on the stick, on the toothpick. All right. I hope you got golden nuggets from today. I hope. Right. So, my main thing, all right, I'm going to leave you with this. Everything happens for a reason. I'm never surprised. Now, don't get me wrong. News catalysts can come out of nowhere. But other than that, I can always, somebody asks me, hey, that's so weird that we're doing this. I'm going to be able to tell you the reason why. I'm going to be able to say to you, oh, I can tell you why that's happening. Or I can tell you why we just bounced there. Okay? Everybody have a great weekend. I'm going to go prep for the session. And have a good weekend. I'll see you guys next week. Okay?